we'll see a big spurt in the final hour of trade. So let's see how that goes. For the time being, the Nifty Bank, after quite a few days, finding its form and outperforming what the Nifty is doing as well, Surabhi. So things looking good.
Things are looking good, and it's bulls in control everywhere. I mean, here on our street, around the world as well. By the way, a lot of the Asian markets that were down in the first half of the session, even they reversed. I'm talking about the Nikkei, for instance. Hong Kong market closed up about 1% or so. Europe right now, very, very buoyant. If you're looking at the CAC, the DAX, these markets are at the highs of the session so far. Wall Street futures are positive. So we've got a good thing going as far as global equities are concerned. Well, for all practical purposes, about 80 points, counting down to that all-time high. May not happen today, this afternoon, but perhaps, the Nifty will keep its date with that level come next week. There we go. We are at the day's high and, barely, exactly 80 points away from that level now. It's been a good-looking screen. So some of the trends that Nigel was talking about, let's pull up the contribution chart. You have had all-round, well-rounded participation. The life insurance stocks really took off. I mean, you saw that conversation that Yash had with the management of HDFC Life. We'll keep getting you more snippets from that. But the life insurance space is, rock steady and solid. Reliance has led from the front. The banks came back with the bang today. HDFC Bank is on your screen. The others will come up as well. The other side is not bad. I mean, the reaction to TCS was more or less contained. You've got Tech Mahindra, Wipro losing a little bit. Infosys actually is gaining. So the market digested the TCS news very, very well. No problems there whatsoever. And then you have some profit taking continuing on the autos. Let's bring back the Bank Nifty tally, the Bank Nifty contributors. There's not a single stock on the downside. That's how strong the comeback has been after yesterday's sell down on the Bank Nifty. And pretty much all of them, I mean, SBI, ICICI, name it, all of them are stacked up on the green side of the screen. But let's not forget, the bigger party boys obviously are the mid caps and the small caps. And what a day we've had once again. It's a long, long list. I'll leave Mangalam to give us the headlights and the highlights. But I think I just want to talk about the listing as well, Mangalam. What a day. I mean, 45% and counting on the new kid on the block.
What a day indeed. I mean, they left some money on the table and the street lapped it up, giving it 45% in terms of a premium today as well. That's the IKIO stock that we're talking about. But it is a good-looking screen, and who knows, in the next 1 hour itself, we may hit a fresh record high. The reason why I say this is because, while the Nifty Bank is doing well, the Nifty is holding above 18,800 for such long a period. After a very long time, actually, it's holding on to these levels. And secondly, the fly in the ointment would have otherwise been the IT stocks, and the IT stocks, while they're still underperforming, the IT index has moved off the low, so they're not falling as much. In fact, from the lows, we've seen a near 0.5% recovery on the index itself. Individual stocks moving much better. The broader market's looking extremely strong as well. Not only is the Midcap index closing in on a fresh record high out there, we have nearly 2,000 stocks advancing for just about 900, which are declining. And if you just look at, a bunch of stocks which are doing well, I'm not even talking about the F&O stocks which are surging as we speak, Ashok Leyland, Hindustan Aeronautics, RBL Bank, ICICI Pru. Look at the cash stocks. We have Wockhardt, which is up 13%. Mazagaon Dock, the entire defense theme is doing extremely well. Mazagaon Dock is up around 12%. Giving it company from the defense pack is Garden Reach Shipbuilders, up around 8.5%. Bharat Dynamics was a big gainer yesterday, continues to gain today as well. Then you have Kalyan Jewelers. After that large trade that happened, that stock another 12% higher. And then a bunch of these dairy names too doing extremely well. Parag Milk had a big move in the last hour yesterday, large volumes as well. That continues to do well. And Indian Hotels, Kamath Hotels, I mean, it's all over the place. Everything is gaining, and the market's sustaining those gains. And the ones which were falling also are now recovering from the lows. So who knows? Is it a record high on this Friday afternoon at some point in time, or should we wait for Monday?
Well, let's see. I think the bulls have anyway, opened up the bubbly, if I could say that. They're not even waiting for that level anymore. This is a very buoyant-looking screen, whichever way you cut it. So let's go to Mitesh and get some calls in for the last hour. Mitesh, now I want to start first with the Bank Nifty call. I know you were running with some shorts. I guess that trade, for the time being, it hasn't quite played out. So have you closed it off, or would you like to keep it open and maybe even carry it forward?
I think we've shorted these levels will be good afternoon. And I would wait for the Bank Nifty to get past 4,400. We've actually not shorted the futures. We've bought put options of July expiry, 44,000 strike. And till it starts getting past 44,000, I will want to keep the trade open. So it's not a very big kind of risk which we've taken. Around 43,750 is when we started shorting the Bank Nifty, buying the put options of the Bank Nifty, and 44,000 on this spot. And these are all spot levels I'm talking about. Is your reversal point. So till that happens, I think I'll be pretty okay with maintaining or holding on to my short positions, short bias position rather. And on the stock side, I think we've been trading with some kind of long bias, so I have two buy calls right now. ITC is something which is after consolidation is making a fresh high. So from a swing perspective point of view, I think keeping a stop just below 449.5, this can be taken as a long position for targets of around 466. And M&M Finance, I think, again, a very outperforming kind of a stock, gave a pullback for the last few days and now is again making a fresh high. So buy here with a stop at 299 for targets of 315.
Okay, all right. Thanks a lot for that, Mitesh. We'll keep coming back to you in the final hour of trade, but keep your eye out on the bottom of the screen. There's an interesting deal brewing in the commercial vehicle space. After a while, that is, a likely M&As could be around the corner, as per sources to CNBC TV 18. Vivek Iyer joins us to tell us what's happening between JBM Auto as well as SML Isuzu. Vivek, tell us more.
Well, what we are picking up from our sources, it appears there's a large deal brewing as far as the entire commercial vehicle space is concerned. What we understand from our sources is that JBL Auto is now leading the race and is the leading contender to acquire a controlling stake as far as SML Isuzu is concerned. Now, remember, what we understand from our sources is that the Japanese promoters of SML Isuzu are looking to exit the Indian operations, and JBM Auto is most likely going to become the company that has a controlling stake as far as SML is concerned. What we understand from our sources is that talks are actually in advanced stages, and JBM Auto has started the due diligence process, which is ongoing for a while now. We also understand that JBM Auto is now looking at multiple options on how exactly they will go ahead and proceed with this particular stake buyout. What we understand is that it could either be an outright purchase, or there could even be a proportion where there's a cash component as well as a share swap deal. The deal, what we understand from our sources, is that the deal is likely to value SML Isuzu at a premium to the current market price. We reached out to the management of both JBM Auto as well as SML Isuzu. So far, we haven't received a response from them, but we will keep you updated in case we do get a response. In terms of the rationale, what we understand from our sources is that JBM Auto so far has mainly been active in the institutional business, especially been quite aggressive in bidding for EV buses, from the government segment. But this particular acquisition will give them a foothold into newer segments, especially school buses segment, which is quite an attractive proposition. The other thing that they are eyeing as far as SML Isuzu is concerned is the very large and good dealer network that they enjoy. So that will be another thing that we need to keep an eye out for.
Wow, interesting story, Vivek. We will most definitely track developments out here, but the street is hearing you. And as the news flashed, and as you were speaking about the rationale behind this, it was a big spike that we saw in the prices of SML Isuzu itself, up around 6% as we speak. We also have Prakash Diwan joining us now. Good afternoon, Prakash. We were hoping for this Friday to be a big newsmaker from a market standpoint, but this deal brewing in the CV space, autos, something that's close to your heart. Do you think a deal like this is possible? And if it goes through, would it change the fortunes of either SML Isuzu or JBM Auto for you?
Oh, absolutely, Mangav. Good afternoon. So, I think this deal ends up being a win-win for the simple reason that SML has been kind of struggling to grow its market share, its footprint, because they've got very few products. Remember, it's not easy for just a few products in the portfolio to help you scale up. I mean, school buses, institutional, transportation solutions. Those are very niche. JB, on the other hand, has had a huge foray into, and it's been sustaining itself with a lot of struggle with the EV side of commercial vehicles and utilities. Now, if they were to acquire something like this, they could spin it into a much more scaled up model for buses which run on electricity. So, it is a win-win. All depends on how quickly the Japanese agree to kind of giving out this controlling stake, because remember, it's significant. Almost adds up to about 58%. So if that were to happen, SML's fortunes will change. I'm not too sure if it actually happens.
Before we move on, I just want to pull up the one-year chart on both of these stocks. What a phenomenal move, JBM Auto and SML Isuzu. We're talking gains anywhere between 80% to 100% plus on the one-year chart. Let's see if we can pull up those charts for, that's SML, 120% over the last 1 year. And JBM, this is, you can't really shake this off, 37% higher. So, just looking at this humongous run-up, and of course, we need to see what happens with the deal contours, whether it goes through or not. But even otherwise, X of this deal on JBM particularly, Prakash, what's your call?
So, I think the good part of recognizing this company as a very formidable EV player has already been done, and the stock reflects that. But the kind of competition that it will face as it intensifies, when more players get in, and with proven technology, with proven track records, like you have the Electra portfolio, which is really kind of expanding. Somewhere, Ashok Leyland and Tata will also kind of get their act together. So it's going to be a competitive landscape for them to continue growing. Initial years have been good, where they were early starters. But I would keep away from the stock because of sheer choice on the other side. It's not that there's something wrong with JBM Auto, but there's much better stuff available as alternatives, and that's a reason why it might not see too many takers at elevated valuations.
Okay, got that. Well, Prakash Seon, lots more questions for you. Now let's look at the other part of the market that is really buzzing. And we're talking about life insurers. Now, HDFC Life Insurance reported a pretty strong performance for the year that went past FY23. The company is expecting margins to remain quite steady this year as well, and it expects to build on the annuity growth as well as the credit life business. Yash actually caught up with Managing Director and Chief Executive Officer of the company, Vibha Padalkar. Yash, so that was a very interesting conversation that you had with Ms. Padalkar. The stock's taken off. It's rubbing off on some of the other life insurers as well. Tell us, I mean, really, if you were to distill down everything that you picked up, what was the biggest takeaway from that conversation that you had?
Well, Jarvit, it was a very interesting conversation, of course, with the management at a time where in the last couple of weeks, we had a few brokerage notes which sort of downgraded the sector. And one point which those brokerages mentioned is that if the multiples to the stocks have to sustain, they will have to see VNB growth. That will be key as far as multiples to the stocks are concerned. The management in our interview sort of hit the nail on the head. First, let's just talk about what the company has done so far in the first 2 months. As per the management, HDFC has grown its premium 1.8 to 2 times the private sector, life insurance sector. Retail APE has grown 1.8 times. Group business has grown 2 times. Also, the policy growth itself has been 2 times. Now, this is what has happened in the first 2 months. But what was more important was what the management guided as far as FY24 is concerned. Importantly, as I mentioned in the start of the link, the VNB growth. What the management of HDFC Life said is that they expect mid-teen growth as far as VNB is concerned. And that mid-teen is also if you factor in the advance buying of long-term life insurance policies, which happened in March. If that advance buying has to be removed and a like-to-like growth has to be seen, then the growth goes up to 25%. So that was one very important point for the analyst. Apart from that, they also spoke about margins. They said that the margins could sustain in the 28 to 30% levels, which has been the highest for the company so far. That was one very important point. Also, apart from all these two factors, the management also spoke about how they see a strong growth of 50% in the retail portfolio, which will be a strong pillar for the growth going forward. And credit life also expected to see a very strong growth.
Last 2-3 years, we had a very good trajectory on annuity. Last year we grew about 50+%, and then on a receipt premium basis it was about 18%, while the industry grew only by about 2%. So there also, and thereby market share increase. We now have a lot of innovation in the space of annuities, means that I would expect this to grow in comfortable double-digit numbers that are faster than company level growth. I'll talk about credit life first. Credit life has been growing in the range of between 40% to 80%. We expect growth to be at least 30+%. You will see that for HDFC Life, the retail sum assured growth has been upwards of 50%. So that growth in terms of retail protection is back, and even credit life is back. So I would expect this to see.
All right. Well, Yash, that was, the big interview of the day, and the stock clearly reacting to that. But you know what the rule is, right? On the newsroom, on the floor, you deliver, and you deliver the pizzas as well post-market close. We're getting them, right?
Well, Nigel, I'm just waiting for the team to come upstairs and sort of have a little party here.
We'll look forward to that, Yash. Keep your word. At 3:35 odd, I'll be seeing you soon. And congratulations on a good interview. Well, Prakash, what do you make of that? Unfortunately, Prakash, you're going to miss these hot piping pizzas that come in later post-market hours. But, maybe Yash could arrange a piece for you as well. But what do you think about the life insurance space and HDFC Life in particular?
So I think it was a wonderful revelation to how the manufacturing side on the insurance business looks at these changes in taxation and regulatory environment. And that's precisely the point. When you look at it from the other side, things look quite dismal, saying there are lots of things which are changing, ticket sizes will get impacted. But from a manufacturer's perspective, from the insurance perspective, there's still so much of runway to growth. And I was astounded at the fact that a 50% retail growth is still kind of very easily manageable. Now, if that were to be the industry standard or some sort of a benchmark that everybody would vie to go towards, Nigel, there's no reason why this sector would go. So that's exactly why you see that re-rating thanks to this interview and message getting clarified from the industry side. Also very clearly, I think the way digitization is helping penetrate the markets, the underinsured segment of the market is rapidly evaporating. And I think the space is just going to go on as the process streamlines, the kind of, people get comfortable using it, the agency network starts kind of depending on it. So there's lots that's happening. I have always believed that insurance is a secular 8-10 year story. You buy a basket, stick to it. Don't worry whether SBI does well or HDFC or ICICI. Keep a basket approach, and you will kind of get rewarded from superior to market returns, given the way the industry is kind of set up here.
All right, Prakash, we'll reap the rewards to the investors in the insurance space, but for us, we'll be reaping the rewards of the pizza that Yash will be getting. He's asked Nigel and Surabhi to come up to the newsroom. I am in the newsroom. I'm ensuring that, those pizzas are delivered. But I reckon there would be more than just pizzas this time around, because if you just take a look at the way a couple of these stocks are moving, we have United Spirits, which has moved to the high point of trade. It's a Friday factor. We ask you to stay back, come back on the other side. We'll, continue our conversation with you and also get our Alpha Manager of the Day, Anshul Sehgal of Kotak PMS, joining in to give us their views on the indices as well as the markets as a whole. Stay tuned.
Welcome back. You're tuned in to Closing Bell. Well, we're almost popping the champagne out here because we're almost at those all-time highs. We're counting down less than 50 points left on the index to get to those all-time highs, which we hit on December 1st itself. But what's happened in the last 15 to 20 minutes is the Nifty Bank, it's broken those resistance levels. The bears had positioned themselves that the 43,850 odd mark can hold out. Just take a look at that. Once we broke that mark, we've directly done a quick 100 points in a matter of 10 minutes. That's the Nifty Bank, now 500 points. Who said it was out of form? It's coming back in form. And the Nifty IT index that otherwise was dragging all through the trading session, that's on the way to move into the green. So that's a big recovery. Both the pillars of the markets, they are doing well in the last 10 minutes. Explains why the Nifty is making a bit of a dash towards those all-time highs. HDFC has done quite well. And Infosys, if you want to pull up a stock, I think Infosys is the one that hadn't moved much. That's moved to the high point of the day. But let's focus on another stock, Avenue Supermarts. That's a stock on our radar. The stock is up in trade today. And the stock has been up close to around 11% in this week itself. Manglam, tell us more there. The one rumor I've heard, I told you this morning itself. But that's just a rumor as of now because the stock needs to get included into FNO. Only then can it come into the Nifty. But tell us more.
That's correct, Nigel. We'll be watching out for Avenue Supermarts, but you spoke about the top batsman performing for the Nifty itself. Just look at Reliance. Reliance has moved to the high point of trade, and along with Reliance, we have ITC as well. So both those stocks come up for you on the screen. Both of them have moved to the high point of trade, and as we speak, just 36 points away for a record high on the Nifty. So it is nearly all guns blazing. The IT index recovering, Reliance and ITC also performing out there. But let's move on to Avenue Supermarts. This week, it's up around 11% this month, up 16%. From the 52-week low, the stock has rallied about 22% as well. But remember, it's still about 32% away from its all-time highs it hit up a couple of years ago. The large part of the decline was on account of weak performance by the company. Secondly, valuations. 5-year average valuations have been 60 times 1 year forward EV to EBITDA. Now the company is trading at around 36 times. And recently we had a Motilal Oswal note as well. They believe that the fair EBITDA for the EBITDA multiple for Avenue Supermarts should be around 40 times itself. What are the key triggers we're watching out for? Recovery in same-store sales growth. Remember, no more than 50% of their new store additions have been added in just the last 3 years itself. So recovering same-store sales growth out there would improve their performance going forward. Improvement in product mix, more discretionary products in their overall sales, which are high margin, as inflation eases, so people try and spend a little more money on things that are a little expensive. Scaling up of their e-commerce business, DMart Reddy, and DMart Pharma store-in-store strategy that the company's made. You can now buy medicines at a DMart store as well. How does that scale up is something we'll be watching out for. But the market cap of the company after this big rally is 2.5 lakh crores, 2.6 lakh crores. It's the 21st largest company in the country in terms of market cap. Also the only company above 2 lakh. Why just 2 lakh? About 1.5 lakh crores in terms of market cap as well, which is still not in FNO. So that is something we'll have to watch out for. If it does get included in FNO, then maybe what you said may come true.
All right, Manglam, it's a fantastic Friday. Just take a look at the index. As you took us through details on DMart, now from 50 points short of the all-time index, Surbhi, we're just 20 points away. The Nifty Bank is now up 600 points. Big move is what we're seeing out there. SBI has spiked up. Kotak Mahindra Bank is coming to the party. IndusInd Bank as well is flying away. Are we bracing ourselves for fresh all-time highs? Actually, we made a dash towards that 18,870.
This is, my God, this is a market moving on steroids. I haven't seen this in a while. And we're not exaggerating when we're saying this. This commentary is absolutely in line. Look at this. By the time I finish a sentence, 18,850 has already happened. That's Kotak Mahindra Bank. The banks are surging away. The Nifty was up. The Nifty Bank was up 1%. Now suddenly it's up 1.4%. This is a big move. And the others are contributing, whether it's ITC, whether it's Reliance. It's a big one out there. 18,850. We are less than 30 points away. Just around, in fact, 35 points away from the all-time high. Prakash, just want to, there we go. We've got the countdown timer up. Now, Prakash, we don't know if it obliges today or not. But what a journey it's been, right? Life looks so different. I mean, end of March, the gloom and doom, and now here we are, middle of June. And what a screen we've had.
Oh, absolutely. And this goes to reinforce the fact that never say never. All-time highs in a time of a situation when the market seemed to be in doldrums was quite fascinating. But as Manglam said precisely in the beginning of the show that, if the Bank Nifty were to start rallying in the last 1 hour, could see fireworks. You have 30 minutes, 40 points, not a bad combination. But even if it doesn't breach that magical mark, the new high that it makes, what it tells you is that the market is in a state of buoyancy, driven by an all-round participation. It's not just a Nifty; it's Bank Nifty coming back. It's of course, IT recovering. It's a lot of small cap, mid cap indices also participating. So I think we've never been in such a sweet spot for a long, long time, Shirley. So enjoy the rally. Make sure that you pick the right winners. If not in this round, at least in the next round. But this is definitely cause for celebration that the market fundamentals have come to the fore. It's not just a liquidity-driven market anymore.
Well, cause for celebration indeed. About 30 points away from an all-time high on the Nifty, but don't lose sight of the grand old index as well. Sensex about 100 points away from a fresh all-time high on that index as well. And then as on cue, the Nifty Bank has gone ahead and crossed that 44,000 mark. It's crossed past important levels as well. 44,000 was where a lot of call writers were extremely active. Maximum open interest in terms of calls was at 44,000. We'll keep an eye out on how the market pans out, but just watch out for a couple of stocks which are actually underperforming and not doing well in an otherwise extremely strong looking screen. We have something like a PVR which has fallen about 3.5% odd. Remember, the street was positioning for a strong performance of the latest blockbuster which released today, Adipurush. Turns out that the initial reviews have been insipid, and as a result of which the stock, which went into the release of this movie extremely well, has now seen a sell-off of almost 5% from the highs, currently at the low point of trade. Same time, yesterday we had Surbhi talk us through the movie release pipeline for PVR, but now she's going to talk about IKIO Lighting, a big performance in terms of a debut listing on the exchanges, near 40% premium, but now sitting with a price premium much higher than its issue price of 285 rupees per share. Surbhi, more details on IKIO, and also PVR not doing too well.
PVR not doing too well, so looks like Adipurush plans cancelled for the weekend for now. But let's move on to IKIO. So IKIO Lighting, they raised around 600 crores. 50% of that was for fresh issue, out of which they're going to use 200 crores to set up a new manufacturing facility and 50 crores to repay their debt. Now, they are an ODM player, which is original design manufacturer of LED lighting solutions. Around 90% of their revenues comes from the LED lighting solutions, and they're looking to enter into refrigeration lights and ABS piping as well. Now, their largest customer for them is Signify Innovations India, which was formerly known as Philips India. Around 65% of their revenues comes from Philips India, which they are trying to bring it down below 50% levels. As of March 2022, they have an order book of nearly 86 crores, and for 9-month FY23 period, they have done a revenue of 241 crores, an EBITDA of 50 crores, margins of close to 21%, and PAT of 35 crores. Now, when you compare it with their peers, they were supposed to list at 50 times FY23 PE, but with the 40% premium, now they are close to 70 times FY23 PE, which is very close to Keynes Technology, which is trading at 86, again recently listed EMS player, and Dixon, which is 92 times. So they are right up there when it comes to valuations.
Oh, okay, all right. Thanks a lot for that, Surbhi. The management as well gave us a couple of numbers. They're looking at the exports moving up to around 20%, and margins they believe is sustainable at around 22%. Well, let's move on then. Anshul Sehgal, Head and Executive Vice President at Kotak PMS, joins us on the show. Hi, Anshul. We're on the verge of going to all-time highs, both on the Nifty as well as the Sensex. So I don't know whether, in this conversation, but then we're done, we'll be out there. But nonetheless, it's a good-looking screen. What's your view on the markets? Are you fully invested? Are you sitting on some cash? And do you think select pockets of the markets now are getting a little bit frothy, or do we still have good distance?
Hi, Nigel. Thanks for having me. I'm reminded of a quote from Charlie Munger. He says, tell me when I'm going to die, so I never go there. This is a market where you have unfettered momentum, and a lot of stocks which don't justify the valuations that they're getting now are running away. And it is a human tendency to actually chase and follow these names at any valuations. I would say that they would be well advised to actually stay away from chasing momentum. That is the broader investor community, And in a market like this, go for quality, go for liquid, large companies, if at all they need to deploy capital, and be slightly cautious on asset allocation in a market like this. Of course, I don't want to burst the bubble of this party, but I'm just saying that in times like this, it's always prudent to be slightly cautious. That's what we are at this moment. We are invested, but we are holding some cash, say around 5% cash at this time. And we will take this opportunity where the markets are rallying to take some monies off the table as and when we deem fit.
Voice of caution and reason is always welcome, Anshul. I think you're talking down the market. Now, suddenly we're seeing a couple of dips on the lower side coming through. Maybe the bulls are listening and getting a little cautious. But great to have you on the show as always. When you were saying that, there are pockets where valuations simply don't seem justified right now, I'm wondering, by any chance, is this electrical manufacturing services space? Would you count that in? Because, look at what's happening to today's listing. And we know where price to earnings multiples are heading. I mean, they're just running away on all of these stocks. So, Keynes, Sirma, Avalon, the smaller one, Dixon itself, and of course today's name, IKIO.
Hi, Surbi. Pleasure to be speaking with you again. I think that, this space has significant tailwinds on growth. I was just today preparing a note on electronics manufacture and exports from various countries. And I noticed that this market, electronics exports, is as high as $1 trillion and more, of which China contributes over $600 billion and India is only $25 billion. And in that $25 billion, one company, which is Apple, is about $5 billion. So that tells you the scale of this opportunity that exists and the scale that India has the power to capture, has the capability to capture. Whether it will be able to do that, time will tell. Having said that, of course, this is not a magic wand, and it's not like you wave a wand and in a day India will capture that opportunity. It will take some time. While that happens, valuations start reflecting what is going to happen in the future. And in some of these names, we are seeing that. So with the kind of rally that one has seen in this space and the valuations that many of these names command today, I would tend to agree with you that one should be, not chasing momentum here, be a little cautious. Go for more credible plays, larger plays, and go for valuations which are relatively reasonable even today. In the same breath, I will mention that many of these names, particularly the ones that got listed earlier, those corrected between 30 and 50% in that period of 2021 towards the end of that period until the start of this year. And some of those names have not revived still. So valuation comfort does exist, and which is why stock picking in this space is beneficial as if you contrast it with just buying this space overall.
All right, Anshu, just hang in there. At the bottom of your screen, there are flashes with regards to Zee and Sony. The NCLT has deferred the hearing on Zee-Sony merger until June 26th. So another, can kick down the road. This merger has been facing some sort of issues ever since it was announced, as a result of which we have seen a bit of a decline in the Zee price from the highs as well. Still holding up mildly in the green because the hearing is just 10 days away. The important part is the announcement that came in from the SEBI earlier and what the company plans to do with regards to that. So that will be a bigger trigger to watch out for when it comes to Zee. For the market itself, you pointed out that it's good time to take some profits home, and it seems like there is some profit taking, especially in names which are hitting record highs from the FMCG pack. So Nestle has moved to the low point of trade. It's moved briefly into the red as we speak, and a couple of other FMCG names as well. Case in point, something like a Tata Consumer is seeing some amount of profit booking. Though I would love to see what happens with Godrej Consumer going forward, because today's decline on Godrej Consumer was largely on account of the happenings in Nigeria. They have exposure of about 7% of sales coming in from there. So even if the currency declines by about 50%, that shouldn't be, be a translation loss of more than 3.5% of their overall sales. Bharti Airtel itself has recovered. So let's see whether Godrej Consumer follows suit or not. But a lot of stocks, which have come back right now include the likes of United Spirits. Just wanted your thoughts on this space. The management has spoken about the outlook for the business looking extremely strong. Your thoughts? I mean, it had been underperforming. Do you think the worst is behind United Spirits?
Before I get to that question, I'll just go back to your initial comment, which is that you were serving pizzas in your office and you were bullying Yash, asking Nigel and Surabhi to come and have the pizzas, right? I must say both of them have no right to bully Yash for the reason that Nigel promised me a drink, which never came about, and Surabhi's promised me a cup of tea, which again never came about. So,
Oops. I'm happy to do the tea anytime. I think the drink, Nigel has to now sort this one out.
Anshul, before the next interview, we're having a drink.
Let's do that.
I think next Friday after the bell.
Sounds good. And let's support the price of United Spirits, So, yeah, I mean, they seem to be getting their act together, have a new CEO. Looks like the marketing, the marketing arm of this business is actually going gangbusters. And this space in general has legs. This company has consolidated for a long period of time. If this company gets its act together, it's clearly the leader, and the market is waiting to jump in and buy into the name. I mean, that's in a quarter or two we'll get to see whether they're getting their act together or no. But it just looks like in terms of anecdotes that the company is moving in the right direction.
All right, Anshul, thanks so much for stopping by. It was a bit of a euphoric phase as well for the markets. We're still holding in the green, and see you for a drink soon. I'll bring Surabhi along with me. She can sip on her tea, then you can decide which one you want to go in for. Thanks so much. Have a good weekend.
Look forward. See you.
All right. Well, time to slip into a short break. As always, on the other side, Nimesh is waiting for us. He'll tell us what's going on in dealing rooms in our special segment, D-Street Chatter. Post that, our technical experts will be back with us to tell us what to buy or sell for a reverse trade next week.
Welcome back. You're watching us here on Closing Bell. It's been an exciting last 40 minutes on the show. The market went to kissing distance of a fresh record high, perhaps aided by some sort of flows coming in on index rebalance as well. But moderating a tad bit from there, that doesn't take away from the fact that it's been a great session so far. 135 points on the Nifty, near 500 points on the Nifty Bank. Nimesh, as always, joins in with our favorite D Street Chatter segment. Nimesh, the last 3 days you've been saying FIs are buying, FIs are buying, FIs are buying. They bought and they bought big. What's the outlook for today?
They buy today as well. So you'll see
buys today as well. Okay.
Yeah, you'll see the number as well, I guess. There is FTSE rebalancing as well, so even that's going to help. But even outside that, I believe there is a basket buying, especially market at close basket buying. So I guess the last 20 minutes of trade largely could be attributed to that. There is a last half an hour rush for buying as well from the larger FIs. I know we are pretty much close to the all-time high. So maybe today, once I'm done with my link, or maybe Monday morning, all the anchors will be able to cheer the all-time high as well. So I guess anchors need to be prepared for that. But as I said, there is buying and there is aggressive buying in the large cap names. So that trend continues in today's trade as well. I guess from a sector point of view, the churn continues. So the insurance names are back in focus. Huge moves in the life insurance stocks today, and the private bank stocks are again supporting the market. So the bank Nifty has surged 1%, and a lot of the private bank stocks are buzzing in trade. The good part is there is interest out in the broader markets as well. That seems to be outperforming now, and there are a lot of unheard stocks which are now buzzing. So a sign of caution, but let's not take away from the fact that we are inching towards new highs, and there is this bit of momentum which is going on, helping the Indian markets for sure. If you remember, this week I've been saying for the last many days that there is a large sovereign fund who's looking to increase the India weight, and that's actually helping the markets to inch towards new time highs. And all of this week, what we saw was big FI buying in the cash market.
All right, Nimesh, just the thing that the minute you ask anchors to prepare for an all-time high, rest assured that the all-time high does not happen. So this time around, let's hope that no one prepares and the all-time high just happens.
Yes, I guess it should happen. Look, the way there is momentum, it looks like it should happen. So,
and for all practical purposes, we are at all-time high with the market cap and a bunch of stocks as well. But talking about stocks, what do you have on your list today?
Okay, so in terms of individual names, the first couple of stocks are the stocks where there were large blocks in the pre-open in today's trade. The first one is Kalyan Jewellers, huge move in that stock as well, big volumes. I understand the private equity investor was a seller in today's block, and some marquee FI names have bought. So the disclosures could be interesting, but my sense is some big names will get reported in terms of the buy side. So that's the first one. The second stock where there was a large block in pre-open was IIFL Finance. Even in IIFL Finance, the feedback is one large long-only FI investor was a seller in today's block, but at the same time, a leading domestic mutual fund was a buyer. So a fresh entry by a domestic mutual fund into IIFL Finance at these levels, and hence after that, we're seeing a surge in that stock as well. The third stock is Exide Industries. After a long time, a bit of surge on that stock as well, big volumes as well, and I believe the move is largely on back of a large selling from a domestic PMS seems to be out of the way, and hence we're seeing that big move in Exide Industries as well into this trade. And the last stock is MCX. Again, this is one stock, it has been seen a bit of a momentum, but big surge in that stock as well into this trade. I guess the big buzz or the anticipation in the street is maybe you will hear something from MCX with regards to the shift in the platform. So they've been working on the tech migration for a while now. Looks like that is pretty much around the corner, and hence that's the reason why the street is excited on MCX as well into this trade.
Okay, got that. We'll keep all of those stocks in mind. Nimesh, thank you very much for that. By the way, check out Wipro. So the cool off that's happened in the last couple of minutes from those, big sort of high levels where we thought it's almost there. It's because of some more selling in IT. Wipro's moved to the lows, and there's a very sharp decline on Wipro that we have seen. Throw up in Infosys. Infosys is still positive, but again, losing ground pretty fast. So I think some of this IT selling is played spoil sport.
Surbi, just 1 point on Wipro. Today is the record date. They came out with a very weak set of numbers, if you recall, in Q4. And the numbers look very weak, but they also announced a big buyback.
Yeah.
So there was, so that record date of the buyback is today. Effectively means that till yesterday, people could buy it, and play that bit of tender in and, make some kind of money out there. Because some of those shares will be tendered in. Now that support is off. Yeah. That's why yesterday it was down 2%. Today as well it's down to 2.2% because that support has gone away. So that's one of the reasons. And when market opened today as well, at the start of market, we had made this point that Wipro could be the stock in focus, though TCS, the news flow is negative. Yeah. But that buyback support has gone away. That's why Wipro, I think one of the reasons why it's moved to the low point of the day. Just thought we'll remind our viewers.
Absolutely. That's a very valid point. Good to keep that in mind. TCS anyway has struggled for pretty much most of the session. Wipro selling off very sharply, and actually even on Infosys. All through the day, Infosys was holding up, but now we are seeing declines come through. Mitesh is back with us. Mitesh, so we've got the final 15 minutes to go. What's the advice now?
So a couple of things will be, one, we had the short trade on the bank Nifty being triggered, though I think, we've come off slightly again from 44,000 levels, but it did venture beyond that to trigger the stop loss. Having said that, I think on the Nifty, assuming that this breakout sustains, a fresh trade with a stop at 18,770, these are spot levels, maybe 5 points below that can be taken. I would look at extension of this up move to about levels of 18,920, maybe 19,000 levels. And on the stock side, Metropolis is something, which has come on the radar. I think that's trading well. So VTST here with a stop at 1340, targets of 1375. And the other one is Manappuram. That's a VTST as well. It's closing very good. So that's a VTST with a stop at 123 for targets of 129.
Okay, all right. Thanks a lot for that, Mitesh. By the way, just 3 stocks I want to focus on. Amara Raja, we're talking about the markets moving to the high point of the day. That's fallen off the cliff, actually. From the day's high, it's moved to the day's low. Godrej Properties as well was doing very, very well. I think that was at a fresh 52-week high, but that as well has moved to the low point of the day. So some profit taking is what we're seeing on a couple of these other names, as well as emphasis. All these stocks, big downtick is what we've seen just in the last 10 to around 15 minutes. But let's hop across to Vivek. He broke an exclusive story earlier on in the show, and now he's joining in with an interesting piece on how the Nigerian currency devaluation could impact Indian listed players. Vivek, tell us more.
Well, you're absolutely right. So what's actually happened is that an overnight development where the Nigerian central bank has gone ahead and removed the trading restrictions in the official market as far as the trading of Nigerian currency, Naira, is concerned. That's caused a significant devaluation or a correction as far as Naira itself is concerned. And yesterday, the Nigerian currency, weakened by almost 29% against the US dollar. So in this context, we are looking at Indian companies that actually have exposure to Nigeria and what could be the likely impact. So first, the one that we've been highlighting through the day, Bharti Airtel. Bharti Airtel, in fact, it's not a totally unexpected development. Bharti Airtel, in fact, in its Q4 conference call, had also gone ahead and given the impact analysis as far as its own financials are concerned. What they had told is 1% devaluation in Naira over a 12-month period has almost a $22 million impact on revenues, a $12 million impact on EBITDA, and a $7 million impact as far as finance cost is concerned. MK has come out with a note on this on Bharti Airtel today on this particular development. What they're saying is that a 30% devaluation impact goes ahead and impacts the EBITDA by close to $360 million. So what they're saying is that they're seeing a 12 to 13 rupees impact as far as the total target price that they have of 920 due to the devaluation. So it's a limited impact as far as Bharti Airtel is concerned. Now, coming to the auto pack, we have both Bajaj Auto as well as TVS Motor, both of which have some amount of exposure, to the Nigerian market. So Bajaj Auto gets 12% of its overall volumes from Nigeria. TVS Motors has contribution of high single digit. And Investec has come out with a note. What they're saying is that in FY22, India exported close to $450 million of two-wheelers to Nigeria. FY23 was impacted due to shortage of foreign currency, and that is why imports were restricted into the country. The devaluation, according to Investec, removes the key overhang of unavailability of foreign exchange, and what they believe is it's actually a positive. They believe a move could lead to a gradual increase in pickup in exports. And lastly, coming to Godrej Consumer Products, they too have some amount of exposure there. What we understand is that 7% of the total overall sales actually comes in from Nigeria for GCPL.
Okay, this is really interesting. So that's how we can keep Nigeria in mind, Vivek. Thanks very much. Really helpful to keep that in context for a lot of these companies that have business exposure into that market. We will take a very quick break. We'll come back with more on the market. Last few minutes of what has been a real fantastic Friday.
Welcome back. The market has moderated a little from the highs, but nothing really to worry. Still holding above 18,800 for the Nifty, 43,850 holds for the Nifty Bank as well, even though it is mildly off the highs right now. One stock which is actually at the low point is Landmark, down 7% today. This morning we had the opportunity to pose a few questions to the management of the company, and maybe it seems like the street would have liked a little more than the 6% margin guidance that the company gave us here on our channel, saying that margins at 6% are sustainable. Last year they were at 5.1%, and this given that their used car business, which is higher margins, is likely to grow fast, at some point will become 200 crores as well, and we would see 25% plus growth coming in their after sales business, which again is higher margin business. So with the contribution coming from these places, do we see higher margins or not, is something that the street wanted to know. The company capped the margins at around 6% itself, 7% lower on Landmark Cars. We have Sudeep Bandyopadhyay of Indy Trade Capital joining us as well. Sudeep, good afternoon. Looking decent for the market. A lot of stocks doing extremely well, but among the ones which are not doing well, do you track Landmark Car?
Not much, Mangalam, but I did listen to the interview, and I think the margin guidance was definitely not very encouraging. And you just now analyzed the reasons very clearly. In the second-hand car market as well as after sales, the margins are significantly higher, and the blended margin expectation was much better, at least when things have stabilized. And since the other businesses are growing at a faster clip, it was expected that way. Since that didn't happen, the disappointment is apparent. Even in today's market, when pretty much everything is up, I think this stock is going down.
Right. Hi, Sudeep. Sudeep, I wanted to focus on a couple of names. Titagar Wagons as well as Ramkrishna Forgings. There was a big order that was announced. I think it got formalized last evening. But the stocks are still reacting. They have seen a big run from the recent lows. What's your view on both these two names or any of them?
Well, I think, Titagar is an absolutely significant tailwind behind the entire railway pack. We know this, the new orders which these guys are getting. I think this is a once-in-a-lifetime kind of an opportunity. The time when they get the order and the execution and profit P&L of the company is showing the results. There is a time lag, but I think the market looks at the future and starts re-rating the stocks, and that's what pretty much has happened as far as these railway stocks are concerned. And Titagar Wagons definitely. Most of the cases, Titagar Wagons will be collaborating with some other company for the eventual delivery of the full product. But what Titagar Wagon probably gains is the annual maintenance. And I think that is going to be a recurring business for a very long period of time. At least still these, the wagons, these coaches are in service. And that's what is making the market excited, the annual recurring revenue, which the company will start getting sometime in the near future. As far as the entire forging industry is concerned, I think we have been positive for some time. And I maintain my view that I think, overall, the auto ancillary and the forgings pack should continue to do well in the near future.
Okay, so that's a positive thumbs up on both Ramakrishna as well as Titagar Wagons. Deep, hi, good afternoon. I've been looking at Kalyan Jewelers. It's such a market, a vibrant market for mid-caps anyway, right? But look at Kalyan. Let's pull up the stock, actually. 16-17% higher. There were block trades in the morning. About 6% of Kalyan's equity changed hands today. We'll find out buyers and sellers in the evening. But just look at that stock. Go 17% higher. And it has been a phenomenal journey for Kalyan Jewelers. Now, Sudeep, I remember that Titan is a stock that's been your long-time, favorite. But let's bring in, Kalyan into the conversation as well. Would you at all look at diversifying or, any view on the smaller peer?
Well, not really, Survi. I think, I will stick to Titan only. I think it's got multiple levers and multiple, positives. Of course, the credibility and the brand equity which Titan brings is impeccable. And I will like to stay with that. I don't want to take anything away from Kalyan and the way they have expanded, the way they have moved into the international markets, the way they are, growing. But at this stage, I will still stick to Titan. I think, for somebody who is looking at a slightly longer term horizon, let's say 1 year plus, I think Titan even now is a good buy.
All right, Titan is a good buy now. Britannia is the other one which continues to hit record highs. In fact, now as well, the stock has moved to the high point of trade. Valuations notwithstanding, I remember the management saying that, going forward, they want to diversify, get a little more revenue out of their adjacencies, which is cheese, cakes, breads, all these factors, even dairy. Britannia has moved well, margin expansion on the cards. Do you think there's still some more headroom to grow in Britannia, or would you back its smaller peer Bectors? Because even Mrs. Bectors has seen a big rally over the last 3 months or so.
Mangalam, I'll be a little careful as far as Britannia and Dr. Bector and these stocks. If I have to really get into the FMCG, I will play on the rural revival theme, and I will go back to the tried and tested HUL and maybe Dabur, because both these two companies have a significant component of rural sales. HUL absolute number, they are the largest, and Dabur percentage-wise, they are the largest. So, and rural revival, the way we read is definitely on the cards. Rural incomes are bound to go up. God willing, if the monsoon is good, I think there's no looking back. So I will recommend, I think, HUL and Dabur at this stage. There is absolutely nothing wrong in Britannia, but it has run up too much, too fast. So I will probably bit cautious buying into Britannia at current levels.
Sudeep, it's always good hearing your thoughts. Thanks so much for stopping by. Wishing you a good Friday evening, a good weekend as well, and we'll touch base next week itself. But a quick focus on the markets. It's looking good. We're up 130 points. Well, Surbhi, I'm not in on Monday, but I think you guys will be cheering to fresh all-time highs. Hopefully, the US markets don't disappoint. But I think even if it's not a very deep gash that we see from the US markets, the buy on dip will continue. And Monday morning, Surbhi will be popping the champagne, I think so. Though you have a tea date with Anshul.
Mondays are only tea and coffee. No chance. But yes, I think the mood has been very, very buoyant. And we've come, it's almost there, right? We were 30 points shy of that. So who knows? And in any case, even beyond the index, I think the parties started long back. And we've seen a lot of that. So 18,826, pretty much around this fulcrum is where we're going to cap it off.
Absolutely. Just one stock that we need to focus on, Wipro yet again. This was the alert that we put out this morning, that the buyback support is out of the way. It's seen a lot of selling in the last 30 minutes. It's going to go home, ending at the low point of the day. But time to wind down market action then today. The Nifty Bank came back in form. That was up closer around 500 points. So it's found its form finally. It was a relative outperform actually in comparison to the Nifty. From the Nifty, some non-banking names did well. That's the insurance space. HDFC Life, SBI Life, they were up and about. And Bajaj Finance as well. So all three of them, the top gainers. What else did well? Dr. Reddy's and Titan, both of them, they did pretty well in today's trading session. And the big boys, HDFC Twins, that have been underperformers actually in the recent past, both of them popped up and trade. On the losing end, Wipro, as we said, the buyback support goes out. Bajaj Auto as well came in some profit, taking down close to around 2%. And TCS as well, down close to around 1.5%. But Surbhi, you said the party is on in the broader markets. Who all were dancing?
The ones that have been dancing for long. Mascot Doc, look at that. Another 12.5% higher on this one. I mean, the year's tally is already 50% plus. That's just this year, 2023. Let's move on. Kalyan Jewellers, the stock that we were just talking about, 18% up after those block deals. MRPL, 7.5% on the higher side. Look at a Karur Vyasya Bank, 7% there. There's a Rites, there's a Garden Reach, there's a Mishra Dhatu. So quite a few of these PSU stocks actually managed to do quite well. Polyplex, 6% up. It's just, almost like an unending list. Remember, yesterday, hospital stocks were very, very buoyant. Today, we had some add-on names joining in. Wockhardt, 11%.